What up? It's your boy Carlo, back at it again. And in today's video, I'm gonna do my technical analysis of the S&P 500. Are we back up for a bull market, or have we even hit the bottom? So I'm gonna be talking about some of these viewpoints and what I see in today's economic market. So make sure you stay tuned, and if you haven't subscribed and hit the like button, please do so right now. So as I said earlier, in today's video, I'm going to be breaking down my technical analysis of the S&P 500 and correlating it with current economic data as well as market news. As of February 21st, we hit our market highs of around, 335, and it retraced back down, let's see, around 36%. So, bam. Yeah, 36%. So that definitely indicates a bear market. Bear markets are 20% pullback from the highs. And as you could see, we're in the 30% pullback territory. But it did bounce off of positive economic news and the Fed's pumping the market. So what do I mean by that? So whenever the government comes in to help the stock market, it's major news because the government tries not to affect the economic markets. But whenever there is trouble in the markets, the government is going to step in. So if you see a lot of things in the headlines, we had a $6 trillion stimulus plan. So the $6 trillion with a T stimulus plan, basically quantitative easing. As the government prints money from out of the sky, yes, I said it, out of the sky. Basically, they're printing money to put into consumers, citizens such as you and me. They did a bill to give us $1,200 for those who make less than $7,500, and then $2,400 for families, and an additional $500 for individuals. They also implemented an infrastructure bill. So since the feds dropped the interest rate to 0%, it's a lot cheaper to borrow money. So with that being said, they implemented an infrastructure bill to roads, highways, schools, etc., you name it, to stimulate the economy. And whenever Donald Trump initiated these bills, you could see the market would pump back up. It dropped down, pump back up. But are these government pumps in the economic market, are they enough to sustain a recovery? I don't know. In my personal opinion, I don't think so. So as I was saying, the government is pumping the market. And basically, as you saw with Donald Trump earlier, he was saying in the beginning of the late February, early March time that not to worry, it's not a big deal. But as time progressed, you could see how rapid the virus has been infecting people all over the world. And on top of it, pension funds are pumping in money back into the market. So you could see right over here around $4 billion. And a lot of companies are window dressing. So window dressing is basically stocks where they have large losses and they purchase high flying stocks, so stocks that are bouncing back to make it look better. But at the end of the day, are these pullbacks and back into the green, is it really enough to help stimulate the economy and get investors like us to put our money back in? You be the judge of that. So as I was saying, you've seen the major news of the coronavirus economic task force meeting almost every single day, giving an update of what's going on. As of today, it is April 5th. We have over 1 million positive coronavirus cases all worldwide. So why am I even doing a video? I'm not here to scare people, but just to give you my own opinion of where the market is going. So I currently have positions hedging the market. So all my positions going long in a particular stocks, I have short term. I do believe that the stock market is going to go down. So right here, the green line is the SMA indicator, the 15. And then right here is my resistance line in red. So you could see it's making higher lows, lower highs and lower lows. So again, the trend line going down, still following it, as well as the SMA indicator, it's still following it. So right over here, our major area is around the 245 and the 255. So as again, you could see, let's put it back. So you could see the bull market from back in 2009 all the way up to date. The pullback broke the the support of the bull market trend line going up. So that's my analysis of it. Again, in addition, why I am bearish of the short term, unemployment and jobless claims reached up to 10 million people within the United States, and it's going to continue to go further up. Again, oil prices with Russia, Saudi Arabia, and OPEC. Donald Trump had to step in and help de-escalate the cut in production of oil. So basically, Russia, Saudi Arabia are trying to battle for a market share of oil prices. And at the end of the day, there's so much uncertainty of what's going on. Like I said, the government has implemented the CARES Act, delayed taxes, applied liquidity to small businesses. And what I really wanted to have you guys pay attention to is how history tends to repeat itself. So looking right over here, you could see the bear market of the S&P 500. The main thing that I really wanted you guys to see, the averages of bear markets since the early 30s is around 35%. And where are we at from the market highs to the market lows was 35%. So are we down? Are we going to go further down? My guesstimate is that we are going to, based on economic data. And a lot of times the stock market is a leading indicator of what's happening. So a lot of people are saying that the coronavirus is already currently priced in the market. But at the end of the day, we do not know the economic implications of what's going to go happen for the rest of 2020. So just going back down, a big major support right here is around the 219, where it has flattened out at, as well as 233. As long as we're able to maintain the 219, we can probably say that it has bottomed out, but don't quote me on it. So again, you have to incorporate facts, economic data, and how is the coronavirus affecting the overall economic market, jobless claims, the government having to step in to prevent a recession from occurring. And whenever the government steps in, they do a market pump. But at the end of the day, you guys tell me what you think, where we're heading. In the short term, are we heading up or are we heading down? And where do you guys feel that the market bottom is going to happen? So make sure you leave a comment down below. Hopefully you guys enjoyed this analysis, and I'll see you guys on the next one. Peace. And just quick tip, I did have some hedges, so I have a SPY put in May, as well as gold and silver calls. So just a little extra sum for you guys. I'll see you guys on the next one. Peace.